Hey guys, Jeff Beers here from 40 Finance. Today I've got 3 overpriced stocks to sell or hold, in my opinion. The first 8 weeks of the market here in 2019 have been up, up, up. And with that, it's taken a lot of the value out of the market, in my opinion. It's also run up quite a few companies. Some of them, more speculative names, have really pumped their prices. We definitely have to be leery of paying too much for the stocks that we buy in at. And I think the 3 that you have here today, you should either pass entirely, or if you own them, perhaps sell and take some of the profits. So let's jump in. All right, first on the board today is Roku. And with Roku, it's been a rocket ship ride ever since the holiday season. They did have some gains last year. I own Roku TVs. I really like the concept of the stock. But guys, the price right now, holy cow. So you can see with Roku, this is coming off of the December 24th lows. It's skyrocketed, not only because the market did that, but it's had another boost with an earnings report that came out that said its advertising arm is growing at a phenomenal pace, and they expect that to overtake their hardware sales in the very near future. In fact, I think they're almost tied right now. So people went bananas for it. But the bottom line on Roku right now, you know, great idea. Forward PE of 2,169. The trailing 12 months, they were not profitable, so they didn't even have a PE. This company is early. I just don't think it has the scale potential that people are paying for here today. You look at what analyst targets are, the best performing analysts on Tip Ranks, and they have it at about $57. There is 7 of the top performers who track this. The high is 65 and you got a low of 40. I just think overall Roku is a good stock. Maybe I would think about buying it somewhere in the neighborhood of $35, $40 if it ever came down a dip. And to be honest with you, that's not out of the question. Of course, the fourth quarter is going to be your best one because people are out shopping, all those things. So maybe let's take a look at how their Q1 and Q2 numbers did. We know that things slowed down in January and February for most of America. And you might see that this one comes back down to earth a little bit. But right now, I honestly probably wouldn't pay much over $40 for it, just in my opinion. Okay, next up on the list is another stock I follow called the Trade Desk, ticker symbol TTD. And the Trade Desk basically makes a digital advertising platform / dashboard where professional advertisers and digital marketers can pull in all the inventory from across Google and Amazon and Facebook and all those things. It's almost like managing your own little digital marketing agency as far as buying ad inventory. And a lot of the bigger agencies use the software as well. So really cool, and then it brings a lot of different worlds together. And they've had really good profits, particularly in Q4. But gee whiz, this jump right now, you got a trailing PE of 101, forward PE of 57. So they are making some major strides in profitability. However, some of these jumps are absolutely absurd. You know, last year, this stock hovered around 150. It kind of bounced into the 120, 130 range, had some ups and downs. They came out with their Q4 report, which blew away analysts' expectations, and they immediately went from 150 to 195. Okay? Nothing wrong with that, except it's just not that big of a company. And similar to Roku, the thing that's interesting, if you're into these, if you're into digital marketing and e-commerce as a whole, Q4 is the biggest, right? It's shopping time. Everyone's buying on advertising. Everyone's blowing out budgets for the year. So Trade Desk, of course, is going to win in Q4. They're going to see a huge bump in their sales, not only for platform usage, but whatever percentage commissions they get from some of the ad sales. Of course, they're going to win in Q4, especially the Q4 that we just saw. So just be leery to be honest with you, on something like this that isn't really super proprietary in the sense that other people could make a version of this, and you're requiring the connections for Google, Facebook, etc. to be able to plug in. Anytime those valves got cut off, you'd be in a problem. I guess for me with Trade Desk, I'd probably try to get back here if I were to buy, you know, somewhere in the neighborhood of the $110 mark. You look at what analysts are saying right now, you got about a 184 price target. Remember we were at 196 on the slide before, so many are projecting a downturn. The average is 184, the low is 142. We have a high analyst who's projecting $205 over the next 12 months. I just think it comes down. I think the next opportunity for Trade Desk to hit big numbers again is going to be in Q4 of next year when shopping kicks off, but we'll see. It's just my opinion. Okay, the next popular stock that I see as overinflated in my opinion is Square. Square, of course, is the popular payment processor that's taking on the industry like PayPal and MasterCard and all those things to help small businesses come online with an online payment system that accepts credit cards. Very popular. Speculative in the sense that people have been talking about Square for at least 2 or 3 years now, and it just it's a fanfare stock. I mean, it has a lot of fans that don't necessarily look at the fundamentals, I guess you would say. So you look here, reached a high somewhere in the neighborhood of October. So it reached up to 100, then it came down. This is around the time everything came down with the trade negotiations and all that. And it started to bounce back in the first part of the year. And right now it's at $77. So a lot of people might say, well, heck, if it's 77 here today, and we already know that it can get to 100, it should be an easy win, right? What I'm saying about Square, even at $77, you know, whether I'm right and wrong, I'm saying for $77, it's still overpriced, and I would personally not buy it. I would hold it or sell it if I was an owner of Square. Again, last year was not they were not profitable last year from a company. They're still in growth mode. This year, they hit their first PE ratio of 111. They are taking on several behemoths in the space, including PayPal. I actually have done a comparison with Square and PayPal a couple months ago. I'll link that in the description. You can take a look. And you know, honestly, between the two, I just think PayPal is such a better deal for what they're bringing to the table today. Basically, if you're in on Square at this price, you're saying they will rise above PayPal and rise against other FinViz competitors that are out there. You're projecting Square is eventually going to dominate the market. I think that market is too fragmented. I think PayPal has way too much positives going for it to give up much land to Square. You look at the analyst price on Square, looks like we've got about 14 analysts covering. One has a high of 115. The average is 77, which is right where we are today. And there's a low ball in there of $30. So, you know, most of the analysts are saying maybe it's priced about right, but that's over the next 12 months, right? So that's their 12-month outlook is coming right in on what the price is today. I say it goes down a couple. I personally, and I probably will not see this opportunity, but I'd be in the neighborhood of $49 to $47 before I purchased it on Square. It is part of a couple ETFs I own, so I do have mild exposure. But right now, if I put an investment together for something like Square, that money's going to go into buying PayPal. That's just my opinion. All right, so there you have it, 3 overpriced stocks to sell or hold. Hope you guys enjoyed this. Please subscribe to the channel, share it with your friends. I really appreciate it. See you on the next video.